Are you asking yourself before you go to sleep, in the middle of the day, in the office, a question so simple but so complex? Why did Bitcoin crash just the other day? In this video, I will give you not one, not two, but three reasons the chart is showing us why we crashed and where we currently standing regarding our latest price action. As you can see, we are hovering around $10,000 and we are mainly in the red. We will take a look at top 10 coins and of course we will do a technical analysis on the weekly chart of Bitcoin. So after you subscribe to my channel and before we dig any deeper into this subject, let's roar! Well, I must say, my eyes hurt from this redness. Blood is really spilling these days. And this is the reason why we're making this video. Why is this happening? And why is the king hovering at $10,000? And just a few days ago it was $12,000. We lost $2,000 in a matter of few days. By this redness you can see that fear is embedded in the crypto market, and in movers and shakers section you can see that not many coins is on the upside trajectory, but many are falling down. But this is all expected, and the charts gave us this answer on the right time. In our previous videos we mentioned that this run to the upside is not sustainable and that we gotta make a retracement. And here we go, the retracement came. Of course, many of you said that I was too bearish and that I should look at things from another perspective, but the chart spoke. But without further ado, let's head to the weekly chart of Bitcoin. Always remember, what Bitcoin do, others will follow. In our future videos, surely we will talk about altcoins and other coins in this market, but today let's first take a look at the king of crypto, because this is our guideline. First of all, I promised you answers on this topic, answers on why did Bitcoin crashed once again this year. So let's go from the step number one. Our first answer is simple: trend line. And this one is pretty simple. In the video called Game of Bitcoin, we drew this line. We said this is for now heavy resistance. What was once support in our previous 2 years now has become resistance. Rejected us once and rejected us twice. There is nothing extraordinary about this, just a logical conclusion. We said that we will be rejected by this trend line, and we did. As long as we follow this trend line with upper trajectory, everything is good, because we are moving to the upside on a slower pace, but we are moving. So reason number one, trend line as resistance. Let's go to reason number two, and that is Fibonacci. Again, we are talking about support and resistance, but on horizontal levels of support and resistance. Check it out. We will use this peak of 2019 and this low from the March of this year. We will get a clear lines of support and resistance. We are talking about 61.8 in the golden retracement zone that is hovering around $10,000. If you haven't checked videos in my series on Bitcoin, we talked a lot about this level and how it was once a huge resistance, and now what is happening, it's becoming a huge support. What is giving us resistance? Resistance is 78.6%, about $11,700. let's erase all this so that it can be clearer. So as you can see, we are hovering inside this mini channel, let's say, inside this zone of support and resistance, and that was all expected, because look at the zones of resistance before we broke it. I mean, this couldn't be any clearer. And now what's happening? We are hitting that zone of once resistance, now support. Also, our current resistance was also in 2018 resistance, in the mini bull run of 2019, 2 times, and in this day and age we are facing the same thing. So just look left, just look Bitcoin's history, and you will get the answer. By now you're pretty clear on the subject and you know what is unfolding, what is happening. If you still are not sure about all this, let me present you with a third case, and that is moving averages. For our third case we will use a 20-week moving average, as this is the best moving average for establishing trend on the weekly chart. I would highly advise you to look at my previous videos, and the one just before it. We are covering the subject of moving averages more in depth. So if you don't know how moving averages work, definitely check that video out. I will leave you in the right corner a link to my whole Bitcoin series, so you can choose the video of your liking. Assuming that you already know how the moving averages work, we are using it as dynamic support and resistance, as opposed to the horizontal support and resistance that we stated before. For example, in this box you are seeing the bear market of 2018, and as we entered on this candle below the 20-week moving average, it became our resistance, and it followed us many days. Only when we broke above the 20-week moving average, things changed, and the parabolic move followed. The problem with this parabolic move was that it was too parabolic and unsustainable. For this bull market to go higher, we should have made a support in the 2019, 1 year ago, at the 20-week moving average. We didn't, we crashed. After that, in our mini bear market, it became a resistance again. As you can see here, we had the fake out. Many of us thought that the breakout of this 20-week moving average was finally a beginning of the bull market. But on the March, on the big crash, things moved in a different direction. Again, as you can see, we couldn't hold the 20-week moving average. Now, why am I showing you this? Because of one reason only, and that is that we are currently touching the 20-week moving average and finding the support on it. For us to go full bull market, we need to find support and this crucial moving average. Without it, we are again in nowhere land. But why we crashed? It's pretty simple. We crashed because it was the most healthy thing to do for the Bitcoin price. As we moved through the 20-week moving average and broke it, we never made a bounce of the 20-week moving average. And as you know, what was once support should become a resistance. So in the grand picture, without us testing this 20-week moving average, we could never go any higher. So embrace this retracement, and just start thinking about it the positive way. If we are really in a bull market that all of us think we are, we should bounce off this moving average and head to our next level. But why we crashed? Well, it's pretty simple. When the price go far above the moving average, and this is the fastest moving average that I'm using, the 20-week moving average, it should always go to its median line, and its median line at this example is 20-week moving average. Now, when we combine this explanation with the other two that I gave you, things could be pretty clear and simple. My message to you is keep calm. Everything is according to plan and pretty simple. If we bounced, things are super bullish. If we broke the 20-week moving average, warning sign is ahead. But for now, let's not be bearish. When others are fearful, you shouldn't be. But now I want to know, what do you think about this 20-week moving average and this support that we are talking about? Will we bounce off it? Will we make a stand on the upward trajectory to the bull market and the new all-time highs? Let me know in the comments, and if you like this idea, smash the like button. And until the next video, let's move through the not so average Bitcoin and other cryptocurrencies.